Welcome back to our market update video. A lot's happened since the last time we posted our video. Joining me today are Jeremiah Riethmiller, our CIO partner, as well as Senior Financial Advisor George Kaufman. I guess let's get right into it. George, in the last 2 weeks, with the conflict in Iran, a lot's been going on. The market's moved a little bit. Volatility certainly spiked. Especially we've seen with commodities like oil. What's the updates there? Kind of what are the expectations? How's the market digesting all of this?
Yeah, good question. So we've certainly seen a lot of volatility in oil, less so in the stock market. But just to take a step back and look at the big picture, in general, geopolitical disruptions like this tend to be pretty short-lived. We saw this with Russia and Ukraine. There was an initial pullback in the markets, but that conflict is still ongoing. Markets have been very strong over the last 3 years. So what we see is that after the initial shocks, markets tend to, and businesses in particular, tend to reroute supply chains, find out alternatives to avoid the conflict. So for this current conflict, it's all been about oil. We saw oil spike over $100 per barrel this week. I think it got up to like 115 or so at one point. Now it's back down into the mid 80s. This is something that we're watching because if it stays expensive for an extended period of time, that's when we could see it start to drag on the rest of the economy. But at the moment, it's pulled back a little bit because we've seen a couple things. One is that Iran has been shipping their own oil through the Strait of Hormuz, even though that's shut down for everybody else. So they're still supplying oil to China. Saudi Arabia and the UAE, they have pipelines over land, so they can move oil over to the Red Sea, still get that shipped. Not as much, but that's helped to relieve some of the pressure on pricing. And then individual countries also have oil reserves that they can tap into as well, so that can help reduce some of the volatility, at least in the short term. We saw that happen with Russia and Ukraine as well. Countries were able to dip into their own reserves to help smooth over some of the price impacts. What does this look like for markets as a whole? Well, it's been, I guess to me, I was expecting a bit more disruption than we've seen. Year to date, the S&P 500 is down about 1%. So it's had kind of a sideways year so far. International was up significantly, took a hit at the beginning of last week, but it's still up 4.5% for the year. So looking forward, a couple things that we're thinking about as far as potential opportunities to take advantage of. One would be tax loss harvesting. Anytime you have a lot of volatility, that opens up the potential for some tax loss harvesting. And then if we see more or heightened volatility, we could also have the potential for some rebalancing as well.
Great, George. Jeremiah, the other big headline, within financial world is private credit. What's going on there? We've seen a lot more headlines around private credit. Our team moved out of the Cliffwater strategy in December. How do we feel about private credit going forward? How should our clients be thinking about that?
Yeah, I continue to feel pretty good about private credit as a whole, but there's nuances related to some of the redemption requests and headlines and how these different strategies have been able to handle it. The Cliffwater trade in particular was something that we didn't feel comfortable with in terms of the structure. So the structure is very important when you're dealing with investing in the private markets. And the Cliffwater structure, they are required to provide a certain level of distribution. There's no gates, right, in that interval fund structure. So if there's a mass redemption, like we saw in the headlines today, there's a 7% redemption request. That gets potentially very challenging for them, where they're forced to sell assets. Compare that to Blackstone, who actually just issued an over 7% redemption for their quarterly redemption. But in that structure, they have cash, they have loans maturing, they have the ability to manage through that and say, look, clients want that money back. We're going to give our clients what they want and grant that redemption request completely. So structure is really important in private credit. Who you're working with in the private credit market is also very important. We selected to work with Blackstone because they're one of the largest firms in the private market space more broadly. So there's a lot of flexibility for them to navigate choppiness in the private equity markets, private credit markets, real estate markets. et cetera, and to share information and resources across those different platforms at Blackstone. So working out any stuff, any particular deals that are particularly stressed is pretty easy for them relative to a lot of the other firms that are out there that were selling private credit strategies when it was sort of a hot dot 2 or 3 years ago. That's not the case with a firm like Blackstone. I want to elaborate a little bit more on what George was talking about, the impact of the war on the equity markets. A few things sort of expected, right? International equity markets sold off a little bit more than U.S. markets. We saw growth markets, actually, U.S. growth markets hold up better than value markets, which is kind of interesting. Usually you think quality stocks in the value space would hold up a little bit better. George mentioned tax loss harvesting, one of the spaces that we're looking for, because there's not a lot of broad market volatility, but under the hood, there's a fair amount of volatility. This has really been really beneficial for our direct indexing strategies who actively tax harvest individual positions. And then, of course, in our individual stock strategy that we operate as well, looking at positions in there to see if there's opportunities. The challenge is markets have been up for the last 2 or 3 years. So finding those losses can be very difficult unless there's substantial volatility. And to George's point, we haven't really seen that. We don't typically see that in these sort of geopolitical events.
Thanks, Jeremiah. We appreciate you taking the time to listen to our market update video. Please feel free to reach out with any questions that you have. Call or email.